All right, 1 2 1 2 testing. Let's see. Hello, guys. How are you? How's everybody doing? Good morning, Daniel. All right, 1 2 1 2. Yep, I think you can hear me. Awotoyi, how are you? All right, so a couple of things going on today. Um, this pound yen, which I'm going to talk a little bit later, is something that I mean, if it plays out, it's going to be awesome. How are you, Baz? How are you, Rolandi? Hope and Brogan. How are you guys? So today I took a short in gold, and I got stopped out, but I managed my trade accordingly, right? I managed my risk. So basically, I lost about 0.48% or so, which is fine, right? I'm still looking for possible shorts in this market, but right now there is absolutely no setup. I mean, our price hasn't hit my levels. How are you guys? What are you looking at? Pretty dull morning today. Absolutely nothing else going on. I was looking at also at possible crude oil shorts, right? So I was looking at possible crude oil shorts before the London Open, right? I was looking at this range, right? So my trade idea was possible shorts below the open, right? But then we got that spike high, so I decided against it. But now I'm looking at possible shorts again. Now let me show you why. Let's go to the 2 hour chart. So no, actually, let's go to the 1 hour chart. So on the 1 hour chart, you can see that this past hourly candle was extremely bearish, right? Um, and not only that, but price broke with the previous low. Now, I mean, let's have a look if it actually broke with the previous low. Yeah, it broke with the previous low, and I mean, it was a very soft break, but still, that hourly candle is quite bearish. So, and I'm looking at this level, right? The 85.80 to 85.60 level, or this previous lows, which is in fact the level that is capping the downside in this market. Patel, you're looking to sell gold? Well, me too. I'm gonna look at gold and then the pound yen. Actually, I'm gonna look at the pound yen right now because I'm gonna place a swing trade on this market. Um, it's quite the setup because I mean this market has been very strong for a while now. And yeah, it might sound, I mean, it might sound counterintuitive to place a long at the highs of this move. But let's go to the daily chart first. If we go to the daily chart, right? Yeah, I mean, there's a big level here, capping the upside in this market, right? It's the 168.50 or so, right? So basically, what I'm looking at here is a breakout of the highs, right? We might stop losses below these lows. And it's a swing trade, right? It's a swing trade. And this stop loss might be a little bit tight, right? Might be a little bit tight. But just have a look at the 3-day chart, right? And this is what I'm looking at, right? I'm looking to place, I mean, to enter long with a tight stop loss and have my risk, have my normal risk, because if this market finally breaks with this level, right? This level that is capping the upside, we have some free highways to the next key level. I'm talking about a possible move, a possible 620 pip, 640 pip move in this market. So that, my friends, would yield a very nice risk to reward ratio, right? Now let me just delete this one, and I'm gonna go back to the daily chart, right? I'm gonna go back to the daily chart. So yeah, my stop losses might be a little bit too tight. They might be a little bit too tight, but if targets are around the 175 level, please also post trade setups in VIP channel. Of course, mate. Of course I will. So there's two options here. This is yielding about a 4.79 R. There's two options here, right? The first option is to trade the breakout, right, which is higher risk, and the second one is to trade the pullback towards this zone. So I'm still undecided on what I'm going to do here, but it's looking very, very good, right? Yeah, I might just wait for the pullback just because of how close we are to this level right here, right, to the 168.20. Yeah, I'm gonna come back to this. Let's have a look at the 4-hour chart. Yeah, definitely, most definitely will wait for the pullback actually. So the reason that I decided against trading the breakout is because of how strong that zone is, the 168.20, and um, because of how tight my stop losses are. So if in fact we get that breakout, the probability of pulling back towards the 167 or so is quite high, and because at first view I wanted to put my stop losses just below those lows. That trade is a little bit too risky, so I'm gonna wait for the pullback. And also, we don't know. No one knows if price is going to pull back towards the 165.70 or so. We don't know, so I'm gonna wait on that one, right? Crude oil. So we were talking about crude oil, and crude oil with the past hourly candle looking extremely bearish. Now I'm looking for shorts again. Let's go to a 50-minute chart so we can actually see what's going on here. Now we have a ton of buying pressure at the lows. Right here are the lows. And yeah, this level did not break, in my opinion, right? So placing a short position right now would actually be ill-advised and burning money, in my opinion. But if sellers are strong enough to keep price below that 86 to 85.80 level, this zone right here, we could in fact have a breakout trade to the downside. Now, let's go to the 5-minute chart just to have a look what's going on the lower time frames. Actually, yes, we got that kind of a break below. And any analysis on CAD yen? I took a long trade. I don't know. Why don't you tell me what you are looking at, and maybe we can have a look. All right, so a couple of possibilities here, mates. A couple of possibilities here. Now, this is the 5-minute chart. So this is the 5-minute chart. I don't see a possible breakout trade. When I say breakout trade, I am talking about sell stops below the lows. Maybe we could get this going on. Now let's go to a 50-minute chart so we can have some targets to the downside. Actually, we need to go to the hourly chart. Now targets to the downside. Now this key pivot level looks fine for targets to the downside on a breakout trade. This would yield about a 1.7 R, which is not bad. And also the reason that I'm looking for shorts in this market is because, I mean, if you remember last week on Friday, I think I was talking about also looking for shorts because of this gap, right? Myself, I don't trade gaps, but this is something that we must add to our analysis or to our decision making process, right? So this market looks good for a possible breakout short. Now, couple of scenarios here too. Couple of scenarios here too. Yeah, we could have that breakout to the downside, but I really don't like stop losses right here. I mean, and this is where I should put my stop losses if I were going to trade that breakout, right? I should put my stop losses about the previous 15-minute highs. But the possibility of going higher towards this zone right here before the actual move is also quite high. So again, this is another market. I already tagged it hot that I'm looking for. Gold. Now, gold, a couple of things here in gold. Yeah, I mean, you are looking for shorts in this market. So am I, right? So am I. So my trade this morning was a break of these lows. And when price came back to break even, I took half of my position off. And I got stopped out on the rest for a very, very, very small loss. Now I think that trading here, trading this level, is to me trading in the middle of nowhere. So where could we find some shorts, and why are we going? Why are we looking for shorts? Right? Let's have a look at the 2-hour chart. I mean, this market, in my opinion, this market is extremely bearish, right? Anything below this level, anything below the 162.50, 163 is bearish. Now, as you can see on the 2-hour chart, price is in the middle of nowhere. And if we go back to the 50-minute chart, well, just by looking at price action, you can see that there is liquidity building up here. This buy side liquidity. This means that there's there's eager to get short traders in the market already. So what zone would I be looking for? Most definitely not here, right? I don't know, guys. I mean, I don't see it clearly. I really don't. This morning I was looking at this. The other reason that I took that short was because of this, right? Kind of a bear trap, which in fact trapped me, right? But now there is absolutely no level right here to look for shorts. So if I were to look for shorts, I'm going to be looking at the 161, 162, etc. These lows, in my opinion, could in fact yield something quite pretty. Let's go to a 3-minute chart, and the reason that I'm saying this is because there's this area of supply that I was looking at earlier, but you know what, I'm really not convinced in shorts at this moment in this market. I would have to see price coming back to this area, rejecting that zone, creating a new lower high, and then tapping the new created supply zone for me to consider going short, right? 1649. What happened? What's Patella? You're looking to sell gold at 1649. Well, that's, I don't know. I mean, I don't get uh, your thought process. Well, maybe you're waiting for this low to break. Yeah, I don't see it. I don't see it. So that's why I haven't tagged it yet. Uh, let's go back to this market. I mean, this market is so strong. Very possibly we'll be placing that swing trade mates. So now I also was looking this morning at Footsie shorts. This was my setup this morning. Footsie shorts. This is the other reason that I like using pending orders, right? Stop orders most when I'm trading ranges, right? My idea here was to trade, to trade a breakout to the downside on a continuation of the bearish momentum in this market, right? And more so because price was, ranging from the open, and it was being capped by this key pivotal level, right? When price broke to the upside, right, it broke with my stop loss level, which invalidated my short idea, and I just deleted that order, right? That's why I don't trade on my no trade ranges. Yeah, I'm gonna just delete this. And yeah, I'm not gonna flip long in this market at all. All right, let's have a look at the DAX. No, the S&P 500. So this was a short setup that I had on Friday that I didn't take. Let me show you because it played out perfectly. So at the open, I was looking for shorts on the S&P 500, right? My idea was after seeing this, right, this manipulation was actually, let's go to a 2-minute chart so you can appreciate the setup. So after this manipulation, my idea was to trade this area of supply with sell limits here, stop losses above the area of supply, and targets at the area of demand. This would have yielded a nice 5.28 R, but I didn't take it. If not, you would have gotten it, right? Now, having said that, mates, I am looking for another leg down towards the 35.48 level. I'm looking at for another leg down towards this level right here, because this is the level that I am going to be looking for a swing trade long in this market. Now, why? Because I'm going to show you actually. Now on the 4-hour chart, right, on the 4-hour chart, we can see that this spike low and rejection of the 34.80 level is quite strong. And then this 4-hour candle not only broke with the previous 4-hour candle high, but it broke completely with the midterm bearish structure, right? So after breaking with this structure, right, it's possible that the character of this market has changed, right? And trying to catch that bullish move at these highs is just not optimal, because most likely price is going to come back towards that area of demand before the big move to the upside. Now this is a long-term, or not long-term, higher time frame area of demand. But if you look at the 15-minute chart, right here, this is the order block, but this is where buy orders started to accumulate here before that massive break, or to the upside, right? And as you can see, right now, price is just pulling back towards this previous zone, And it is looking like a possible bear flag towards that zone where I am going to look for those big time longs. And I know it sounds counterintuitive because of how the Fed is, not manipulating the markets or fiscal and monetary policies, but how the Fed is reacting towards high inflation, right? They're going to keep raising interest rates and unloading their assets, and they're going to stop printing money, right? And that is very bearish for equities. But just technically speaking, on the daily chart, mates, on the daily chart, this is such a massive level, such a massive level that has been rejected. Just have a look at that daily candle. Just have a look at that daily candle. Now, just because we see a big wick, a very bullish daily candle with a big wick to the downside, that doesn't mean that we're going to have a reversal, by no means. But this is just something that flags me a possible reversal. Now, having said that, right, when and if this scenario that I'm talking about plays out, price coming back towards the 35.50 level or so, I will be looking for longs, right? But I am not going to place a full risk trade because of how bearish this market has been the entire year, and also fundamentally speaking, because of the Federal Reserve, right? But I'd rather risk 0.5% on a possible deep buy at the correct moment than just looking it play out after my analysis. So this is what I'm looking for on the S&P 500, right? Again, this is going to be sent to my swing trade VIPs. Both of these trades, right? The S&P 500 and the pound yen are going to be sent to my swing trade VIPs. So if you want that, mates, you can subscribe with the same link. And if you do decide to go to the swing trade group, don't expect to get signals every single day, because that is not how it works, right? The idea of that group is to catch this move. These big moves, right? And you have to be very patient. You have to be very patient because you need to wait for price to develop and for the setup to develop. But once we catch it, we could be looking at. We could, in fact, be looking at a possible 7.5R to first targets, 12R to all-time highs, and of course we're going to let the rest of it ride. And that's the whole idea of the swing trade group, just being patient and wait for this trades to develop. For example, we had an Ethereum long that we got stopped out of. Of course, we are fully transparent here. So we had an Ethereum long that we got stopped out of on this week low. This was during CPIs, right? During inflation data out of the US. But we are still looking for those longs in Ethereum, right? Let me show you what we are going to do. Now, let me just delete this because this is quite interesting. My entry, was here or here. I don't remember. Yeah, I think it was here, the break of these highs with stop losses, of course, below these lows. And we got stopped out, which is fine. Now, now that price has entered this range, I'm not going to do anything at all. But if you look closely here, wow, I hate this. Hold on. I'm sorry. If you look closely here, right? What do you think this looks like? Right? What do you think this looks like? This look to you. This looks like a reversal pattern or a continuation pattern. The porn sites are here again. So this to me is quite the accumulation, and more so because it's happening at a very strong level, right? Just have a look at this. Here, this is the key pivot level that I'm looking at. You know what? This I'm going to change colors so we don't confuse it when I go back to the 4-hour chart. Now, this is the key pivot level in historic price action in this market. This level, and this is the level that I've been wanting to trade, and this is the level that I have been waiting for it to hit again and reject. So right now, this is a no trade range, but this level right here, this is the immediate level that I will be looking to trade. So the 1422 level is my bull bear frontier. Let's call it like that, right? So should price break with this level, longs are going to be in play massively. But because I got stopped out right here on this week low, and because of how price is trading super choppy inside of a nasty range, I'm not gonna look for longs right now. I need to see that big spike in buying volume before looking for that long. And you know what? If this plays out, it's going to give me an even better risk to reward ratio for that swing trade. So that, my friends, is another one that I am waiting for. Hey, my guy, I have awesome chart analysis. Can I send you a screenshot? Sure, mate. Go ahead. Go ahead. Send in here. The bowling. Yeah, man. No worries. Anybody that wants to send a chart can do it. So, yeah, very little going on right now in the markets. Let's have a look at that crude oil. Yeah, very, very, very little. Yuri, how am I feeling about the pound yen? Well, I talked about the pound yen, right? And I am feeling very, very bullish. But I'm gonna go through this for you very quickly again. We have to go to a very high time frame, 4-day chart or so. The reason that I'm feeling very bullish is because of this. This level right here. This key pivotal level in historic price action. We're talking about September 2014 lows made, is the level that is capping the upside in this market. I mean, this market has tested it once, twice, 3, 4, and now at the 5th. But if you notice, this retest of this level is extremely bullish. Extremely bullish. So that's why I'm looking for that breakout trade. Now, if we go back to a 2-hour chart or so, this is the level, right? This is 168.20. But, you know, I'm going to show you on the 15-minute chart or so, whatever. I was looking for possible breakout trades of this flag, you know, placing buy stops here with stop losses below the lows. But I decided against it. Because of how strong that 168.20 level is. And in my opinion, should price retest these levels, the amount of sell orders or sellers that are going to be there, right, are going to completely obliterate, weak buyers. And when I say weak buyers, I mean buyers that are buying at these highs, right? If this level, the one that I showed you on the 4-day chart, was this one right here, I would already be long. That's the main difference. So I'm waiting for that reaction, and you know what? I might be wrong. I might be wrong. In the sense that I mean, sellers might just sweep all the buyers might just sweep all the sell orders at these levels, and price just rally like crazy. But the highest probability scenario is a pullback before a possible break. And also because if you notice here, after if you remember Olympus trade from last week, he traded the pound yen to the upside. Very nice, very clean and fast trade. After that, momentum to the upside just dried up, right? Just dried up. And yeah, today we saw this. We saw that breakout. But you know what? It's just not strong enough. And very possibly we're going to go back to this possible area of demand. And yeah, I don't wanna be trapped in a low probability trade just because I don't want to miss the move, right? But yes, I am going to be looking and placing. In fact, I'm going to tag it red for that long. And the third scenario, of course, is the breakout, right? If price breaks out, I'm going to be very quick to trade that pullback towards those previous broken highs. Ton of possible scenarios here, but yes, I'm looking at this market because if this plays out, right? If this plays out, the next key pivotal level in historic price action are these previous lows, right? And this previous high. And there's absolutely nothing in the middle. Of course, there might be, but on the very high time frames, there's absolutely nowhere here in this range where we have seen big buyers or sellers jump in. No, the level is here where we saw big buyers jump in, and here deep big buyers jump in, and then when we broke to the downside, this is where sellers took control of this market. So if this level breaks, we could in fact see a nice 600 plus rally towards that 175. I know it sounds like fairy tale, but I mean, technically speaking, I've shown you the levels. So that's where I mean, those are the swing trades that I am looking for this week. Yeah, I mean, I appreciate the patience of my VIP swing traders, and I appreciate that you understand what I'm trying to do, right? Because I mean, if I were to send signals every day on the swing trading group, it defeats the purpose because it would be just like the VIP group, right? Trading short to mid-term moves. The swing trade group is it's built up so you have uh, another weapon in your trading arsenal, right? Not only day trading, but having on the back, swing trades where you're just going to leave them run. So Crude, yeah, I don't think I don't think I'm going to trade a breakout here. Yeah, I don't think I'm going to trade a breakout. Most likely, I am going to wait for that rally. Just have a look at what's going on here. Yeah, very possibly. I mean, let's look at some volume. Yeah, I don't know. Why don't you just take a screenshot here and send it on the chat? I mean, I don't have access to the support email, mate. I don't know, something in the vicinity. GJ Bearish. I mean, I would love to see it, but you know what you know what you can do, mate. Just on TradingView, just click the camera here, and copy the link to the chart image and send it on the chat so I can watch. I can click it and see it here. All right, so let's move on. 50-minute chart here. Yeah. I mean, you might be right? You might be right. This level that I'm talking about is quite strong. Quite strong. So, having said that, if we go to the 4-hour chart, right? If we go to the 4-hour chart, right? It's a good thing that that you said. I'm sorry, what you just said, because yes, the bullish scenario is my preferred scenario, right? But I'm not married. No, I'm never married to any given play, right? Given the fact of how strong this level is, I just showed you on the 4-day chart, a bearish scenario could particularly be in play too. But when I see, or when I watch, you know, when I see price action on the lower time frames, this market looks extremely bullish to me. So if in fact sellers are very strong and they manage to break these lows, and these lows, my friends, my long idea might not be valid anymore, although we have this zone right here, right? No, I mean, I don't think I will be trading the short side on this market. And now that I saw this, it's very possible that we're going to get a deep pullback. So in any case, I'm just watching this. I'm just watching this market, you know. But yeah, it looks juicy. Now on the S&P 500 side, right? On the S&P 500 side, it's quite cool that you know, that I showed you this. Just I'm gonna delete this, right? So I'm gonna delete this too. This was Friday's. I loaded the bank lines to a 50 pip stop instead of 100 pip, and it's falling perfectly. Well, good luck, mate. Good luck, you know. Good luck with that. So, a couple of things here on the S&P 500. Let me just have a look at the spools. Yeah, same thing. So a couple of things here on the S&P 500, right? This massive move to the downside, which created a break of these lows. Hold on. Is possibly where sellers are going to be placing their orders. But is price going to rally towards those lows? No. Previous broken lows? I don't know. No one knows. No one knows. And if you notice here, this is quite the pullback. Somewhat like gold is trading at the moment. So the reason that I'm talking about the S&P 500 is because even though I'm looking for longs on a swing trade, this is setting up very nicely for a day trade short. Now, this is by no means developed, and there's absolutely no setup to do so right now. But I'm going to wait for pre-market action, you know, to see how this market develops. Now, there's a couple of levels that I'm looking at here. The first one should be this one, of course, and a break of these lows retest would create a very nice short opportunity with a quite good risk to reward ratio. Now, the other play would be a rally towards these highs, right? But that that is my least preferred short because of stop loss positioning. Right now, a break of these lows creates a very nice, risk to reward ratio, a defined risk to reward ratio in this market with current price action. But if price rallies, and it's looking like it's going to towards these highs, I'm going to have to wait for a lower high to have a defined risk to reward ratio. So I'm gonna have to be in front of my charts in pre-market action, which I always am, right? But the S&P 500 is hot, in my opinion, for a day trade today. Gold, yeah, I don't think I'm gonna trade the short side in gold. Yeah, I don't think so. I'm sorry. I'm sorry, guys. It's 3:40 a.m. here, and this big mug. It's not coffee. It's water. So, any questions, guys? Because there's nothing going on right now. This was my last trade of last week. This US dollar Canadian dollar long. If you were a VIP, you got it. So I forgot. You know what? I'm gonna end up the show right now, but I do have two coupons for a 50% discount to any VIP group. Can be the crypto VIP group, and it can be the Forex or the Forex VIP group, right? It only works for the monthly subscription, and the code is Showtime. So the first two people that get go here and buy the monthly subscription with that code are going to get the discount. And because there's not too much going on at the moment, I'm going to end up my show here. Yeah, but I will be back. I will be back for the New York Open. For the Open, just to show you how the setups, or how the plays that I just talked about have developed, and if I've taken one or not. But I would love to see your chart. Do you give signals for futures trading? No. No, not futures. We trade CFDs. But for example, I'm looking at the S&P 500 right here, which is the CFD that I look at is the US 500. The CFD that I trade is the SPX 500. But I also look at the SPUs, right? So, yeah, there's no signals for futures markets, but if you're looking for plays on the S&P 500, you just have to extrapolate the levels that I'm looking at on my CFDs to the SPUs, right? Pricing might differ a little bit, because of how different brokers price their derivatives. But also, for example, I trade when I trade crude oil, I look at U.S. oil, but I trade USO, right? A CFD on USO. But if you trade futures, right, you can extrapolate the levels that I'm looking at to CL. But if you're looking for, level 2 trading and, fast scalping, we don't do that. Yeah. But, if what you're looking at for its levels, it's basically the same thing. For example, right here, I'm looking at, this is the CFD on the S&P, on the S&P 500, right? Price is trading right now at 36.28.7. Let's have a look at the SPUs. I don't even. I mean, and this data is delayed. I don't even have current data on futures. And this is something I need to change. But I mean, yeah, I'm not gonna lie to you, bro. You know, why would I? We don't send signals in futures, but we trade derivatives of those markets. Now, yeah, I mean, there's absolutely nothing going on, guys. Nothing going on, and right now, this might be a very good liquidity wipeout. But you know what? This market hasn't been kind to me, so I'm going to trade carefully when it comes to crude because I don't know. I mean, yeah. What do you guys think about this market? I mean, to me, it's looking very bearish. More so because of how this level seems to constantly be broken with, right? Yeah. So on the hourly, I'm gonna go to a 2 hour chart just to show you this one. But you know what? Let's grab the week low of this candle. Still, still looks like it's going to break. And this hourly candle, the past hourly candle, I mean, I just love it. This is super bearish. But now that I moved my level to this week low, this hourly candle just closed above that level. Now it's not looking that bullish, that bearish, right? So scratch that, people. Scratch that. Not looking for sales in this market, right? But still, place for the open short on the S&P 500 and this pound yen, mate. This pound yen. I mean, this pound yen is going to be the trade of the month if it plays out. Right? Any more questions before I log off, guys? More than happy to respond to any questions that you might have. There's absolutely nothing going on. And when there's nothing going on, you must not push it, right? Yeah, because that's a good way of. Ooh. All right. So hold on to your horses. Yeah, this is the thing, right? This is the thing. Would you trade the short side here in this market just because price almost hitting these lows? No. In 10 minutes, UK finance minister will speak. Maybe this will impact markets today. Yeah, most definitely will impact the pound, right? I don't have a pound position open or pending order in any pound market. Nope. Yeah, I mean, the last time that this happened, do you recommend a 1% return daily, as some gurus courses suggest, compounding that using FX investment? You know what? I mean, that question, it's weird. I find that question very weird because, I mean, you can't know for sure that you're going to get 1% return every single fucking day. I mean, you're not. Right now, if you're talking about quitting the moment that you hit 1%, yeah, I mean, that's a good stop loss, right? I mean, not stop loss, but stop profit, let's call it. Yeah, I mean, that's a good idea, right? That's a good idea. But, the way that I see it, is this, right? If I'm up 1% on the day and I see a massive high probability setup, am I not going to take it just because I am up 1% and I'm afraid of losing the 1% back to the market? Fuck no. I'm even going to use that 1% or half of that 1% that I just made to push it because I trust the math behind my trading. It means that it really doesn't matter if if I lose 5 trades in a row, 6 trades in a row. It doesn't matter because I know that mathematically speaking, on the long term, the setups that I traded, which were losers, are going to print money, right? So I'm not results oriented, and I, I do have a stop loss, a daily stop loss, right? If I lose 2 trades, 1.5%, I stop trading. I stop trading, right? Not because that might push me to make bad decisions, but because because it's because of my mindset, right? I take care of the most important thing for me is my mindset. So, yeah, if I lose 2 trades in a row, right, or if I lose 1.5% or 2%, let's call it, right, 3 trades, I stop trading for the day. Why? Because even though I mean, if I continue trading, because I see some very high probability setups, and those setups end up losing, that's going to fuck my mindset up for the rest of the week, maybe. And I'm not going to be able to come back fresh the next day, uh, because I mean, I'm going to be thinking about what if uh, on the past session, and that's something that I just learned by making that mistake. But that's me. Everybody's different. Everybody's different. If you, for example, the way that I feel comfortable trading is that when my trade is up 1.5%, I take 1% off, and that's it. I mean, if my trade, I mean, sometimes I take 1% off at I don't know 50 pips or whatever, and the trade ends up running 150 pips. But that's fine because because sometimes the trade after 50 pips would have pulled back on me and stopped me out at break even, or even worse at a loss. So to keep myself sane and emotion free, that's what I do. Just test out what works for you. That is my advice. And compounding your money is the most powerful thing. So my advice is this. If you have a small account, don't try to hit home runs, in the sense that don't risk 30% of your account. Always risk the same amount, right? And over time, just keep adding money to your account, because the gains that you made on your first deposit, right, plus the money that you add, is going to compound you into trading bigger with the same risk percentage, right? So yeah, that's my advice. And if not, there's a ton of funding firms out there. But yeah, whatever works for you, man. There's a ton of ways to make money trading, and no one is better. Not one way is better than the other. It's just different. For example, and there's strategies that are going to make sense to you. There's strategies that are not going to make sense to you. For example, I one of my best friends, he trades Elliott wave, and the fuck, every time that we sit down and discuss the markets, uh, you know, yeah, it's a big discussion because he don't understand what I do, and I don't understand Elliott wave. I do understand Elliott wave, but the on the itty bitty, on the very specifics, the levels that I take my trades versus the levels that he takes his trades are very different, and that's where the discussion is. But he makes money, I make money, right? So whatever works for you, right? Getting funded is the best. It sure is a very good way of managing big. a big enough account in a very, very short period of time. Yeah, it's good. So, guys, a quick view on what the hell is going on. Um, this is quite interesting because um, let me show you. 7 minute chart. And you know what? I use the 7 minute chart. There's absolutely no reason why I use the 7 minute chart. I just dig it, you know. There's no reason. So, quite interesting here, mates. Yeah, let's just grab this high. So quite interesting here, because if you notice, momentum is drying up to the down to the upside in gold, but this first of all, this um, of course shorts, weak shorts, I call them weak shorts in the market, are trading in the middle of nowhere. I don't understand why we are seeing sellers jumping in, or no, and not even profit taken from those, whatever. But very, very possibly this is going to get strip. If you have a max daily drawdown of 5%, wow, dude. But that's for the man for the max daily drawdown of 5%. That's for the funding firms, right? So I personally never go above 0.75. Personally, personally. Sometimes I go 1.2, but I'm having a good day, and I see a super good setup, right? That's where I push a little bit, or put the foot on the pedal. But you know what? This is the first rule is to survive, mate. The first rule is to survive. The second rule is, you know, to take care of your equity, right? Getting out of a 10% drawdown is hard. It's hard on the mind, and you know, most people just can't do it because they're going to start chasing their losses and trading bigger. And a trend, you know, a 10%, 15% drawdown. Um, yeah, it's quite hard. So my advice is just you know, test it out, test it out, right? Don't overtrade. If you're looking at a maximum daily drawdown of 5%, you know, that to me is super wide, and it's super generous in the sense that if you are thinking of hitting that drawdown, don't trade at all, right? Don't trade at all. If you're thinking of hitting a 5% drawdown on one day, don't trade at all. Um, uh, look at it, look at it like this, you know. The way that I would look at it is, the 5% daily drawdown is so big that it's going to be very, very hard for me to hit it and lose my funded account, right? So this is a long term. This is a game of surviving, mates. Let's be honest. We are small fishes in this fucking game. We have no capital to have a real weight in the markets. We are trading with the least information available, and when we find an edge, it's very, very, very quickly. Uh, it's very quickly taken away if you are not disciplined. So yeah, it's hard, right? And that's why you know, that's why the first rule should always be take care of your money. because if you don't have money, you can't make money. I mean, you can't trade, right? So don't look for those home runs. I mean, if you are disciplined, you are going to. I mean, you're going uh, to uh, to understand that, yeah, sometimes you're going to have very, very good trades that are going to give you a 3% return. Yes, but those are not going to come from you over risking or over leveraging yourselves. Those are going to come from you trading your system, because those trades happen, but they don't happen every fucking day. So singles, hit singles, mate, because profits add up, and no one in the fucking history of the financial market, never, no one has ever gone broke by taking profits. So always think about that. Holy shit, my first trade, I start with one lot and then move up. Well, you know what? I don't even look at the lottage, the size of my trades, because I look at percentages. So, I mean, if I'm risking 0.8% one setup, I mean, might yield a 2.5 lot size. The other one might yield a 0.35 lot size. So I don't care. Right, guys? I hope some of you got go. I don't know if it's still active, but Showtime is the code for that 50% discount. Again, there's nothing going on, mates. I'm gonna try to be back at the open. If Olympio hasn't scheduled his show today, I'll try to be back at the open. I mean, oh, I'm sorry. I don't even want to drink coffee because of how slow the markets are. But you know what? Some days, they're just like this. There's not going to be setups. Markets are going to be slow, and those days are the days that test you as a trader, actually, because you know what? Sitting on your fucking hands is the hardest thing a trader can do. But being flat is also a position. So yeah, that's why I hate. That's why I hate when people ask me, "Hey, you know what? Yesterday you just sent one signal, and I'm expecting four signals a day." Well, fuck you. If you want to burn money, go ahead, trade 4, 5 times, 6, 7 times per day. I'm not gonna be pushed around. I'm not gonna trade if I don't see something juicy. And right now, my friends, there is absolutely nothing juicy whatsoever in these fucking markets, right? The little juice that I saw, I got stopped out on. But you know what? The day isn't over yet, and these S&P 500 shorts are looking very good. I mean, there's no setup right now, but but this is looking very pullbacky, if I can call it like that, right? So big level here on the S&P 500. Let's see if it plays out. Now, the S&P 500 just made a new daily high, so my breakout trade is invalidated. Even if it comes down, I wouldn't take it, because now the probability of continuation is lower. But that doesn't mean that I am not looking for shorts. And now the only scenario on the S&P 500 short is a retest of this level right here, which is looking juicy. But you know what? We need to see. Let's have a look at the Nasdaq. Same fucking thing on the Nasdaq, right? Remove drawings. Same thing on the Nasdaq. But the S&P 500 is the one that I want to trade. Oh boy, hold the fuck on. Yeah, the S&P 500, and the reason that I hardly ever look at the Dow is because of the size of the contracts, or the CFD contracts in your brokers. Can you put the details of the S&P 500 in the group? Mate, when and if I get the setup, and when and if I take the trade, you will be the first one to hear about it on the VIP group. And the reason that I'm not gonna send this analysis to the VIP group, mate, is because Um, people pay to be in that group, to get our trades. And the feedback that we've gotten, mate, is that if we send a ton of shit, sometimes they missed the signals. So yeah, I mean, that's why I decided that until my setups are set to be taken, that's when I send the signal and the analysis. But you know what? That's the other reason why I do these shows. Even if there's absolutely nothing to trade, but nothing to trade, we can have fun and look for for setups. Look at silver now. This is something. You know what? Um, Remember that I told you that I didn't see anything going on in gold? Well, that is not the case in silver, my friends. Let's have a quick look because I need to go pee. God damn it, I need to go pee. So, alright. So, if I'm not mistaken, and this is very, 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 I mean, I'm just eyeballing it. If I'm not mistaken, this could be a quite a level to look for shorts here in silver, right? The 18700 or 18670. Yeah, very good. And this is what I was telling you. That buy side liquidity just got taken out. We might get some place here short silver, but yeah, this is what I need to see, right? This is what I need to see. Silver hitting this level, boom, boom, lower high, hitting the new creator supply before the Bramba. So still very early, but stay tuned. My VIPs are going to get it, and if you're not a VIP, you might get that 50% discount if you use the code Showtime. Cheers, guys. I'm gonna try to be here for the New York Open pre-market a little bit, and yeah, heads up to everything that I just told you. I'm sorry. So I'll see you guys in a few hours.